Hey there, I'm Spencer Ford, a certified financial planner professional and CEO of Conservative Financial Solutions. We created the Money Minute to help give you insights on how you can better your financial life in 5 minutes or less. Because oftentimes, a better financial life means a better, freer, happier life overall. And that is what we want for you and your family. So let's get into it. We're going to be talking about ways that you can use to improve your credit score, but we like to keep these podcasts under 5 minutes. We're actually going to break this up into a 3-part series, so be looking out for part 2 and part 3. Now, to improve your credit score, you also need to know the 5 areas that make up your credit score. The first is your payment history. This makes up the single largest portion of your credit score and accounts for 35% of your overall score. Late payments are a disaster for your credit score, so be sure to make your payments on time. And if you've gotten off track, just get back on track as soon as you possibly can. Otherwise, it's going to be very difficult to increase your credit score in any meaningful way. The second category is amounts owed. This makes up 30% of your score. In addition to simply adding up the total debt that you have, this score also takes into consideration your revolving utilization. Utilization is the amount of outstanding debt on your credit sources like credit cards or home equity lines in relation to your overall credit. So if you have a credit card with a $10,000 limit and you put $4,000 on it each month, your revolving utilization is 40%. Even if you pay your card off at the end of each month, that revolving utilization is reported. Your utilization matters both overall and then per credit source. So if you want to improve your credit score, you may consider lowering your revolving utilization. So maybe you increase your credit card limit to $20,000. Now, if you spend $4,000 a month, your revolving utilization is 20%. It's recommended to keep your revolving utilization below 30%, but the highest scores typically have 10% or less utilization rate. In part 2, we'll cover categories 3 and 4, and then in part 3, I'll cover category 5 while also including some helpful hints to not only help you improve your credit score, but to help keep you from accidentally damaging it as well. Thank you for listening to this episode of the Money Minute. If you enjoyed it, please subscribe to be notified when more podcasts are released.
Securities offered only by duly registered individuals through Madison Avenue Securities, LLC, MAS, member FINRA, SIPC. Investment advisory products and services made available through AE Wealth Management, LLC, AEWM, a registered investment advisor. MAS and Conservative Financial Solutions are not affiliated companies. Insurance products are offered through the insurance business Conservative Financial Solutions. AEWM does not offer insurance products. The insurance products offered by Conservative Financial Solutions are not subject to investment advisory requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, time income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Conservative Financial Solutions is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Conservative Financial Solutions.